China aims for a weaker currency by www.forexconspiracyreport.com. China's economy is slowing, and the wealthy in that nation have been expecting a weaker currency for a few years. Thus, they have been moving money offshore to the consternation of the central government. We asked 6 months ago if it is time to panic about the Chinese Yuan. Is it time to panic about the Chinese Yuan? How badly will capital outflow hurt the Chinese economy, and how far down will it drive the yuan? Yuan trading onshore in China is not available to Westerners, but offshore is and is available in several markets worldwide. Where is the Chinese yuan going in the short term, and where is it going in the long term? It appears certain that the yuan will decrease in value versus the US dollar, and certainly the yen, but it will probably not be a steady decrease. Although China does not want a lot of capital to leave the country, they also need a weaker currency to help strengthen exports. The problem with ever weaker currencies is the risk of a currency war. Last year we wrote about a potential Forex race to the bottom. The recent Chinese currency devaluation is simply the most recent episode in the international Forex race to the bottom. It is all about economic stimulus and gaining and maintaining economic strength by making your exports cheaper and more competitive in the rest of the world. And the Chinese are not alone in doing this. The Eurozone is also pushing its currency lower with a 1.1 trillion euro stimulus program. Like the Chinese devaluation and stimulus programs, the Euro stimulus is meant to create jobs and to make European exports more competitive. And meanwhile, up goes the US dollar. The US economy is not as strong as many would wish, but it is doing better than the European Union and is growing while China's is slowing. No matter what China says about trying to stem the flow of capital out of the country, they are more worried about loss of foreign markets and will likely continue to let their currency slide. With that thought in mind, take a look at what Bloomberg says about China's central bank ending its war with the bears. For traders betting on a weaker yuan, the People's Bank of China is turning from foe to friend. 6 months after the Monetary Authority intervened to crush short sellers, Bank of America Merrill Lynch, Pacific Investment Management Company, and Societe Generale SA say that the PBOC is more likely to guide the currency lower than to prop it up. Despite official pledges of exchange rate stability last weekend, bears argue that China's leaders are growing more comfortable with yuan weaknesses after a 3.3% slump since March failed to spark a repeat of January's market turmoil. The upshot could be a gradual yuan depreciation versus the dollar over the coming months, a move that would give China's export sector a much-needed boost. It would appear that we are not the only ones who expect the People's Bank of China to allow the yuan to drift lower in search of relief for a faltering economy. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.